one more time. There. Okay. All right, so that's what we're looking at. Basically, everything's flat, but the crude is actually down some. You know what? I want you guys to pay attention to this concept. Last week, I told you that crude right here is basically driving everything, right? We looked at it and we said when crude is up, then this is going to be down, that's going to be up, this is going to be down, that's going to be up, and this is going to be down, these guys right here. Well, lo and behold, as soon as I say something like that, we had a deal on Thursday where crude was actually running up and the stock market was running up. And I was like, okay, so how long is this going to happen for? And it continued to happen throughout the day. And now when you're looking, you see that crude's actually, it's down slightly, but it's not really down that much. You know, it's been having 3 and 4 and sometimes even 7 to 10% run-ups in the pre-market. So this is pretty flat, actually. And you're looking at the stock market, it's pretty flat. And there was a time earlier in the pre-market when it was actually up and the stock market was up. So I'm not sure that we're seeing that inverse relationship anymore between crude and the stock market. So that's a very important distinction that you need to make into your minds, because if you're day trading and you were using crude oil as basically an indicator about whether you should be going long or going short, you can't use that right now. You're going to have to just use the price action. So make a note on that. That's note number 1 for you. All right. So we're looking at everything. It looks like it's a little bit flat this morning. Let's take a look at the charts. I want to show you something here. This is from a longer term perspective. We're looking on a daily chart, and I'm going back over, well, we're going back through to 2024. And what I want to show you here is the reactions off of the 200 period moving average. So, and I wanted to show you 2 examples and then where we're at right now. So this is example 1 right here. This is example 2, and this is where we're at, right? So let's begin here with example 1. All right, what you see here is that we were moving in a downward trend right here. And actually it was actually a channel, and then we undercut the 200-day moving average, right? And when we undercut that 200-day moving average, we came back to retest it from the underside. And you see on that retest from the underside, what ended up happening? We retested, it held there for a second, and then it exploded over. Then you had another consolidation, then you continued up. And what did you have? You had this move right here. Look at that move. That's the reason why people are actually thinking about getting in at this time, because that is a possibility. That is a scenario. Once again, I'm not thinking that is the scenario, but it is definitely a scenario. So you have to put that into your mindset. Scenario number 2 is right here. We come back, we bounce under, and then we test from the underside. And on this one, which we may end up seeing this exact same thing play out, we have a slight overshoot before it gives it up, and then it comes back down. And what you have here really is you got a B, C pattern playing out on that. It's a lightning bolt is what you see, right? So that is, and to me, when I'm looking at this, it seems almost to me like that's what's playing out here. We have the downtrend on the overshoot, on the undershoot. Then we're probably going to get a slight overshoot. And if situation B plays out, we're looking at the ABC move down like this. Okay, so that is another scenario. And then those aren't the only 2 scenarios, okay? But just to keep it simple, we're going to keep it at that, okay? Let's just say this, all right? There's a bullish scenario and there's a bearish scenario, and we're at the inflection point right now. And you know, I definitely don't stay long on bearish bets, because if you look at the stock market, if you stayed long on this bearish bet, you would have got wiped out from here to here. If you stayed long on this bearish bet, you would have got wiped out from here to here. Now, if you ended up staying long on this bet, you would have got wiped out. But if you just continued to stay long, you actually would have continued to make money. And that's why longs, in the long term, they seem like they always make money in the stock market, right? being bearish on very long-term swing trades is not really a good plan. If you want to go short on swing trades, you need to well, the bullish scenario. Okay, I have somebody asking about the bullish scenario. All right, once again, the bullish scenario is this. Okay, it's that you undercut right here. You could draw yourself. Let me see here. Here, you draw yourself a trend line. There's a major trend break right there, right? You can draw yourself a trend line. Above the trend line, you go long. Or if you want to get in even sooner than that, okay, you could do this. On the break of the 200-day moving average, you could actually go ahead and go long. If it breaks below, you have to get out. And then you carry this on. Use the 10-period moving. It looks like the 10-period moving average on that thing would actually have been fantastic. If we take a look at it, let's go ahead and add in those moving averages. So let me see here. Let's add in the 20 and I have the 9 here. Let's make it the 10. I used to always use the 9. We're going to add in the 10 and the 20 on that bullish move. And look at that. It carried the 10-period moving average all the way up. And when it finally broke, you could have went ahead and got out. And when it reclaimed that 10-period moving average, you could have got back in again. It's in a continual uptrend there. So I don't continue to hold through these low periods. I figure I can always get back in. So that's the way I trade. But you'll have to find out what's best for you. Let's go ahead and let's start digging into the SPY on a more detailed time frame. Okay, let me pull up my Thinkorswim, and we'll close this. It's a tighter screen today because I am working off of my laptop and I am in the United States, so I'm working remotely. I don't have my big monitors like I usually have, but I will go ahead and adjust the font size so you can see it a little bit better. Let's look at this one right here. I've already added in targets for what I'm looking for out of the SPY. This is on a 24-hour now time frame rather than the daily time frame. In the daily time frame, this orange line right here is your 200-period moving average. So on the daily time frame, it's already testing it. On the 24-hour time frame, it's not made it up to that moving average. And what you're seeing right here is, let me just use my arrow key so I can kind of help you out. You're seeing from this spot down to this spot right here, that is an ABC move for 100 Fibonacci, not retracement, but extension direction, okay? And it's hit that, and look at that. It's hit and stopped 4 times in the last 24 hours. It's amazing how these Fibonacci's work out. Now, if it ends up breaking that, the next target market is right up here into these moving averages, which is the 670, 680 area. What's fascinating is that this 161.8 Fibonacci comes into the very bottom of the previous range. Look at this. This range was right here, and it's just funny how these things just end up working out. It's like almost like it was planned, like, months in advance, which it couldn't be, but it's just interesting how the market is. Now, that's the upside projections that I have. There's target number 1. Target number 1 is right here, and target number 2 right here is we already hit. And now there's a possibility of target number 3. How did I get those targets? I've showed you guys this before. I'm going to show you again just so it helps you with creating some of your own technical analysis. But what I noticed right here was that we had a bearish falling wedge within the regression channel. The measured move from the bearish falling wedge was this ABC pattern of this 100% Fibonacci extension. And now that, once again, the third measured move is the 168 measure of that Fibonacci extension. Now, you also have, if it's a bearish play, which I always believe that the bullish falling wedges are really just pauses in the continuation move of going into the negative. In other words, a bullish falling wedge will only be bullish until it retraces that 61.8 or the 100% usually, okay? So usually it's only going to get to here or here, and then it's done. And then after that, it's a continuation pattern of what was going on before, which is then this. And that's why I've got this other ABC pattern pulled out. It's actually pulled from a much closer time frame, which I'll show you that right now. Okay, so that one is from right here to here and then to there. So it's not a lightning bolt. It's almost like a, I don't know, like a Z pattern. But it will take you right down to the bottom of the current regression channel. And right now, where are we at? Well, it's once again very fascinating, but we're also at the very top of this regression channel right here. So it's at the top of the regression channel, and then so also it's at the top of that Fibonacci extension. So that's the scenario right now. A break above is bullish. A break above, and especially a retest, rather than a break above. A break above and then a failure, a wick above. That's bearish, because now you got a lot of longs that are going to need to get out quickly. So you're really going to have to be on your feet today. Really going to have to be ready. You got to be able to move quick. You got to be able to get in and be able to get out. Okay. So that is the larger time frame. Let's go ahead and let's take a look at the hourly time frame and the 15-minute time frame, and then I'm gonna give you a quick overview of like 20 different charts to kind of give you an idea what does the market feel like today, and then let's take a look at the dashboard, and then I'll take some requests on stocks. And I also have a stock that I'm actually in right now on the bullish side, because it has a beautiful falling wedge and has just been beaten down so much that I just don't see a lot of downside risk. These are your numbers right now for the SPY on the 15-minute chart, okay? So on the 15-minute chart, we're looking at two pivots right here in this whole zone right here. Let me do this in a rectangle so it's a little easier to see. Two pivots in this. We're looking at 653 to 652 area as a downside support. On the upside, you have 658.75. So basically, you just say 659, and then 658 right here. 658 right here. So between 658 and 659 on the upside, we're basically trading sideways right now, if you see that, right? Where are we at in regards to the overnight balance range? Okay, overnight balance range is right here. This is our overnight balance range, and we're sitting smack dab in the middle. All right, what that tells you is this. It tells you you need to sit on your hands for the first 5 to 15 minutes. You really shouldn't do any trades, because right now, really all that's happening here is it's a battle between the bulls and the bears right here in this zone. This zone is what is a profit losing zone. You don't want to be in there. What you're going to look for on this, if it continues to stay in that balance range, and especially if it continues to stay in the middle of the balance range, you want to look for something that actually looks like this. Well, that's not what I want. I want this. Something that's actually, it comes up, retest. We want to see that retest, I think, today, because it looks to me like the market's unsure right now. It doesn't want it. The bulls don't want to give it up, and the bears don't want to step on the bulls right now. But if you get that test and then the break above, it looks like that could be a very good long. And then it's just the exact same opposite on the low. So just mark your high and your low, your pre-market high and your pre-market low. If you're above the pre-market high, you should be bullish, okay? At least while it's carrying the moving averages. Now, after time's been playing out, say it's 30 minutes or an hour into the move, then you might want to be looking at the moving averages, because now you've already hit the first or the second target, first or second targets. So let's go ahead and let's get rid of all of that. And what we will do is I want to show you this. All right. Now I'm going to turn my camera off now. All right. So what you're looking at is, and the reason why I'm showing this to you is because these are like a lot of the stocks that I kind of keep on I keep this on a side monitor, okay? And now I'm going to watch this for moves and explosions and stuff like that. And the first thing I want you to notice is everything is green, okay? So even though we are at the middle of the balance range in the SPY, there has been a little bit of a move, to the upside on most of the major stocks, right? And the stocks they're tending to look a little bit bullish right now as we speak. So you're looking at Apple right here, it's moving up. You're looking at AMD, you got yourself a nice little bull flag right here. You're looking at Amazon, it has a somewhat of a bull flag right there. You're looking at Boeing. Boeing has a nice move up. It looks like it's stalling out. Everything is going sideways though in this pre-market. This Bloom Energy has a very nice bull flag, but the bull flag is playing out for quite a while. So once again, and almost everything is looking in that same direction. Trend up. Microsoft trend up. Bull flag on Nvidia. This is the wrong kind of bull flag, but on Nvidia, you do have where it's already above this this resistance area here and testing from the top side, which is a good thing. So mark that down. There's your mark for Nvidia. Let me take this down just a notch. 177.5. It holds at 177.5. We're looking for a move up on Nvidia. TSM has just recently lost the snapback low, but if it carries that snapback low and it carries these moving averages, we're looking for it to get up into the 350 range from 341. You got yourself a nice little bull flag on. These are all hourly charts, by the way. A nice little bull flag on Visa. USO has a nice little bull flag. So basically, the pre-market is actually looking it's actually looking somewhat bullish. But I'm going to caveat that with this. What do we know about how the market's been trading lately in regards to the pre-market and in regards to how the regular traders have been making the pre-market pay? What we know about that is that what's been happening, and it hasn't happened once, but it's happened quite a few times. What's been happening is that whatever's been happening in the pre-market, when the regular traders get out there, they have been stepping on the pre-market people's heads. And so be prepared for that. I'm not saying that that's going to happen. It's a possibility that everybody believes that we're going to go into a ceasefire. The Strait of Hormuz is going to open straight back up. We're not going to have any problems. Iran's going to fold here at the last second. Trump's going to fold. Whatever it is that's driving the bullish behavior. I don't really care. I only pay attention to the narratives in regards to how it's informing me on the technicals. I am a technical first trader, and that's the way I trade the market. So let's take a look at our dash. So here's your dash right here. And we'll go ahead and we're going to start with the pre-market, which we've already touched on. But Bitcoin is up big time. As you can see, it's up 3.7% here in the pre-market. And then the NQ is up and gold, but they're not up by much. They're flat for the most part. But you can see that Bitcoin actually is up very strong and across most of the time frames. It looks like I kind of jammed that a little bit. We're going to leave it as it is, but I want to because I want to just keep going forward with the stream here. And let me go ahead and turn my camera back on now. Hold on one second. So you can see my bright, shining face, guys. Okay, here we go. Going back into this. All right, the VIX is actually, I'm showing that the VIX is up. So I don't know if that happened just recently or what, because we saw on FinViz the VIX was actually down. The dollar's flat, and your yields are flat basically. Nvidia is the high volume leader. Intel, Plug, Tesla, ONDS, these are all your high volume leaders. SoFi is a high volume leader. And in your price up, in your gap ups, you got MicroStrategy making a nice little comeback. That might be one to take a look at. You also got Micron, SNDK. I can't trade SNDK. I've tried too many times. That stock, if you trade that one, you got to be really careful. The spread on that thing's insane. And then when you go over to the options, it's just as bad. I would love to actually get some of the coin. If coin is actually seriously about coming back, this is a great price for coin. I think coin under $200 is probably a value if Bitcoin has actually found its bottom. So coin is the one to continue to take a look at. In your pre-market gap downs, you got LPL, you got the Dow. Kind of interesting to see that down there. In the pre-market, the RK is up. That's signifying that we're probably looking at pre-market's saying it's risk on, baby. It's risk on. So, and then your semis, they're slightly up. Your technology and your communications, they're all slightly up. They're outperforming the SPY. So once again, that is also saying risk on. And your metals are up. You got silvers making a nice little bounce, 0.5%. XLK, FCX, so your copper's up, and so is gold. And then on the downside, gold miners, that is. On the downside, gold's kind of flat to down, actually. But let's see here. Let's see actually what is on the extended sectors. We got, yeah, TLT's down on the extended sectors. Your China trade is down, energy's down, and so is oil. So that explains that. So let's go ahead and look at some charts. Did you guys put in some requests for me to look at any specific charts in the chat? Looking at the chat right now. So, good morning, guys. You know, the University of Michigan is playing for the national championship. I'm a Detroit guy, so I'm going for the University of Michigan. I can't wait. It's been 38 years. National championship is on tonight. National championship. I don't see any tickers in the chat. I'm going to go to, there's NVIDIA. Okay, that's good, because actually my fallback on that is actually to go straight to the Mag 7. So we'll go ahead and we'll touch on the Mag 7 real quick, and then we'll go ahead and we'll hit up all the ones that you want to look at. Leading the Mag 7 in the pre-market. Let's see who's the leader. Tesla is leading the Mag 7 in the pre-market. And then that's followed by Meta and then NVIDIA. Since we requested NVIDIA, let's go ahead and let's take a look at it. So here's NVIDIA. It's testing from the underside. It actually, I've been bearish on NVIDIA, I got to admit, until it came down and hit my target of 165. And that's what I told for the longest time. It hit 162.79. So it undercut my target, 165. I have been bearish. But now, if it can regain this snapback low right here, and these snapbacks, I cannot, I cannot continue to believe. It's almost like I fell into it by accident, you know. But you can see these. Look at this. Look at this. The snapback low. And now, where's it stopping at? It's stopping at the snapback low. This is like, it's like a hidden support resistance that is found through my algorithm of how I actually identify this, and through the back testing that I did on this. And by the way, these indicators are available on my website, stockchartistry.com. And thank you. I've already had a couple of people go out there and purchase them, and I appreciate your support. So anyhow, what are we doing? We're setting up. We're bullish, actually, guys. We're bullish on NVIDIA right now. It has bullish price action. Let me put it that way. This is exactly what you want to see. You don't want to see this. You don't want to see a big bar running into resistance because you used up all your energy. What you want to see is that big bar run into resistance, pull back, run into the resistance again, then go ahead and just set up camp underneath of it and begin to build up energy and build up pressure. If it busts over that and then busts into this zone, that upward trend channel is actually what you're seeing there is a regression channel, and it's a upward regression channel is what you're looking at. So you look at the chart from, if we zoom it back out, it's an upward regression channel from here where we were basically going sideways, but it was slightly up, sideways to slightly up. Now we've gone ahead and we've actually had somewhat of a pullback. Do I think that that is the final pullback? Honestly, it could be, but it really depends on what the market's going to do. I think you got to follow the market on this one. If we take this move right here, this ABC pattern that I'm seeing right here, let me see, A right here, BC right there. Yeah, we undercut the first measured move, and we didn't make it to the second measured move. And this is a lot more than an undercut. It took it right down to the middle of that. That's kind of unusual. It's not like these. It has to 100% obey these Fibonacci's, right? But I tend to believe that you're actually going to see a pullback into that area. Once again, though, if the market is strong, or if maybe Nvidia is going to be the one leading the market strong. You gotta play the price action on this number right here. Let's go over to the 15-minute chart and get you some pivot numbers, okay? So I'm gonna zoom that out, and we're looking at, yeah, Nvidia, like the SPY, it's in the middle of a balance range, right? So you're gonna have to wait to see how this plays out. It is trending a little bit higher. This is your balance range right here. Your number here is 175. On the top side, you've got a range right here. You got a range between 178 to 179. You're bullish over 179, and you're bearish underneath 175. It does have a general move. It's in a general uptrend. If you follow this 50 and this 20 period moving average, you can see that it's in a general uptrend. So it probably wants to go higher. But at the same time, whoever's off sides on this, it could end up busting to the other way. All right, let's go ahead and let's take a look at Tesla, guys. And I do see the requests out there. I see for Oracle and Oxy and Arcat. And we still got 15 minutes, so we're doing fine. Let's go ahead and take a look at Tesla. And Tesla's in this terrible downward regression channel. It's underneath of the 20 period moving average. So if you're going long on Tesla, what you need to do is you need to actually, be ready to actually take it off once you get your move. Don't stay too long. When you're in a downward trend like this, and you see maybe some bullish action on the lower time frames, do not stay in long, because the larger trend is down. Look at that. The larger trend's down. So when the larger trend's down, you could have actually let's say you went short right here. No, let me see. Let's say you went short right here. Like, okay, it hit the middle right here. I went short. And then for whatever reason, I'm not being Don Lett anymore. I'm being a crazy person who refuses to lose. I continue to hold my position, and I'm losing big time right here, right? But just because we're in a downward trend, guys, just because we're in a downward trend, this whole period right here where it was just floating, and it really wasn't doing anything. It was ranging, right? It was ranging here, 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 right? But what ended up happening? Right here, well, that's a terrible drawing. Let me show you this. Right here, I actually was making money. I was making money because the general drift of this entire thing is down. And that's why trading with the trend is your friend. Never forget that. Trading with the trend is your friend. The fastest way to lose your money in the stock market is to be, don't get me wrong. I love reversal trading, but you don't stay in reversal trading against the trend. If you want to reverse trade this, which I would do right here, I would try to actually pinpoint that. You see your wick right there, and then you have a second wick, and then it's at that top level. I might have taken a short there. I probably would have got out right there on the bottom of this thing and not worried about capturing the rest of that loss. Okay. Well, once again, this is actually, I'm sorry, I'm doing the opposite. I might have got in on this one where it looked below and failed. Remember I told you a look above and fail is bearish. It's hugely bearish because now all those bulls are off sides. Now the people who bought are off sides. A look below and fail, that's extremely bullish. All these people who sold short right here, they're thinking, "Oh my God, it's going all the way down to, I don't know, the center of the earth." We like to say it's going to the moon. So in this case, it's going down to the center of the earth, and then boom, it ripped back up and began ripping your face off. These people, they have to get out right away. That's why you see this huge bar right here. That's shorts covering right there, getting out. All these people who are off sides on the wrong side. So that case, yeah, I would get in on that, but I would not stay long. Because, why, guys? Because we're in a downtrend, right? You're in a downtrend. You don't stay long on the bull side, okay? All right. That being said, let's take a look at the 15-minute, and I think everything basically is in a range is what it's looking like to me in the pre-market here. So we're ranging, but we got overhead supply in this case, a big time overhead supply, and it's recent. See all of this overhead supply on Tesla, right? And that's basically your overhead supply. And here's your current range right here, which was defined actually, if you look at it, it was defined by Friday, or no, Thursday's price action right here. Oh, actually right there. Okay, so let's do this. Let's make our range this. So here's the daily price range, and then your pre-market range is actually pretty much following the daily. So, you know, honestly, this is not a stock I would actually look to trade. Not with that, not with all of this overhead supply right there. You know, you have all of these people here. There's longs in here that are looking to get out, and as soon as this thing pops up into here, and then you think that you got something going on, it's going to go down. So at least that's the probability chance of what's happening with it, what could happen with it. Um, is there anything else that we should look at? So the lowest one is Amazon. Everything is positive in the pre-market on the Mag 7, so that's good to know. And let's take a look just for the heck of it before I go to the next things. Your AI trade, everything is positive or flat. So once again, screaming risk on. Your Jumbotron, everything is up except for energy. And Costco is slightly down. I would call that just flat. So basically just energy is down, which the market's good on that. And by the way, guys, Netflix, huh? Netflix hit 100. Look at this, okay? Netflix hit 100. And you know what? Netflix is getting a lot of attention lately. So I would actually pay attention to that. I've been selling puts against Netflix, and I've won every single one of those trades. And I'm going to, as soon as it actually gives me another slight pullback, I'll be selling some more puts, and I might even use some of that premium to go ahead and buy some leaps, because now that we're actually seeming to be in a nice uptrend. My only thing is, I think what I'm going to do as far as like buying leaps on Netflix, I'm going to wait to see what plays out in the next couple of days with where the president is actually given the ultimatum. Will he stand by that? Will it go to the next level? How is the stock market going to react to that? That might be a best play for you guys too, as investing or as in swing trading. But I think in order to actually go long on Netflix, I think I'm going to wait for that. It's got, you know, if you look on Netflix, if we go over here, say to the, let's just do this. Let's go to the weekly chart right here. You go over here to this weekly chart. This is nothing more than a hiccup in its long history of being in an uptrend. It had this one period right here where it just stayed in a downtrend. It's almost equal to that when you look at it, the move. Let's take a look. You know, because I've found also, this is something that I found interesting, and it's happened from time to time. So the market will sometimes actually move with almost exact movements. And if you look, look at that. That is pretty much the bottom of the previous movement was that exact movement. Now, you know, this is as a percentage, this right here is a higher percentage because your price is lower and now your price is higher here. So, but it's really interesting to see that it actually moved right to the bottom of that. And then I also have marked in the bottom of that channel. It hit the bottom of that channel and then actually went up and over. I pulled that off a regression channel and then just created my own. And it also was pretty much, let me stop doing that. Let me get rid of that. And pretty much was challenging, testing the prior high. Not entirely, but almost down to the prior high. So that's a beautiful pullback and retest. We're now at the very top of this channel. So I would like to wait and see what happens from here. But I would like to see it actually begin to get a new channel. So let's go ahead and get rid of that and get back into our charts. We got so somebody wanted Oracle. Let's take a look at Oracle. All right, how is Oracle doing? Oracle's going sideways, guys. And that makes it kind of tough sometimes because you don't have much of a trend right now is what you're looking at. Let me turn off the Let me turn off my indicators for just a second. Sometimes it's great to have the indicators on. Sometimes it's good to just turn them off and just look at price action alone. All right. So you're looking at this. I mean, that's not a good look. It's not a good look. You have a ton of overhead. You have a lot of people, who are off sides on this. Once again, there's people who bought here. Somebody bought there. Somebody bought here. Somebody bought here. Somebody bought here. There's people that buy and they hold. They will not take a loss. They hold. And when the stock finally gets up to where they bought, right here, say for example, that's why you see these lines of resistance on those kind of areas. That person says, "Oh my God, I'm finally back to break even. I can't believe it. I'm getting out of that stock. It's been tearing me up for the last year." So it's been going on for 2 months now that this looked like a breakout, right? Going to go to the moon. No, not a breakout. It was a breakdown. We're almost kind of looking at the same scenario in the SPY. When you look at it, it's testing that downtrend line. It's forming a little thing right there. And once again, if it dips up above like we are doing right now, and then you fail, this is what you could see in the SPY, right? We're on the lower end of this range. If it loses right here, if it loses this lower end, this is a short. Even though it's still already beat down, this thing here does not look good. But let me preface that with the idea that if the stock market decides that everything is good and we're going bullish, everything's going to go bullish, and especially the stocks that are beaten down. So even though it's a terrible look on the chart, there is the opportunity, but it's going to be, for me, a lot of behavior is going to be driven now by how is the major market actually reacting. All right, what are we looking at? We're in the middle of a balance range. Like this balance range goes back and back and back and back and back. So you're in the middle of this balance range from, like, it's been weeks right here. And you are smack dab in the middle. You have no business trading this on any type of longer type of time frame. You can always trade everything, on a day trade time frame. On the day trade time frame, you got a little bit of movement that you can get up to the 150 area. You got to get over this 147, 148 area. Got to get above that. You get up to 150, so you get 2 points on it. I would prefer to actually trade this to the short side because you could possibly get a run like we saw with the previous one where it actually ran the low. And then from the bottom here, it looks like it has, if I throw a regression channel on that, it looks like you have a little bit of an uptrend that you could break right there. So that regression channel is showing you right there, probably a break below 143. You could take that thing short and you'd probably be making some pretty good money. So that's, for me, it's a no touch at this time, but apparently somebody seems to really like Oracle. So MU, let's do MU. 843, guys. Okay. Lightning round, MU. We're going straight to the 15-minute chart on MU. MU is, okay, MU's at the top. You see that? MU's at the top of the balance range. The pre-market balance range is right here, and MU is sitting right here, and it's testing that snapback low. So that's the first thing to notice on MU. The snapback low basically is 383 to 383.5, right? You look at this huge bar right here, and it stopped. Why did it stop? Well, there was a seller right there, obviously, okay? So you actually capture this snapback high, not snapback low, I was calling it a snapback low. Capture this snapback high, come back up, retest, and you're gone. MU looks like it's actually bullish. And actually, MU was up in the pre-market, if you remember. If you lose the, I would actually use this right here. Sometimes I use the pre-market low period, but since we got a newer measure right here, I'm not sure that I would even trust that wick. Sometimes these wicks like that, they're false numbers, but you can put that number on your chart. Let's go ahead and do this. Let's give you a different number. The more recent number is right here, 370.75. 370.75. If it hits below that, you're probably looking at a low coming into that 200 period moving average. If it loses a 200 period moving average, you could quickly find yourself back down to 339. So this actually, this is going on my list. Okay, this is going on my list to keep an eye on because I think this has the opportunity for movement. RCAT going straight to the 15-minute because we're in lightning round, right? 8:45 right now. RCAT is in the middle of it. No, it's at the top of the balance range. It's been in a balance range throughout here, and it's basically at somewhat of the top of that balance range. So that's bullish. So it's bullish across the last few days. In the pre-market, okay, you have this balance range, and where are you at? Well, you're forming a very nice move right here towards the top of the balance range. Now, in the pre-market, because it's right at the top of the balance range, and you have these resistance points, you know, I would actually watch this for a move where it's probably going to end up going down into this point of resistance or point of support right here, and you also have a snapback right there at 13 to there or at 1275, and see if it holds there. And if it begins to move back up, this is one of the times where even though you're inside of the range, you could go ahead and you could give that a shot for a long. Just be ready to get out if it loses moving averages or whatever you're using for your stop loss, because I mean, this could just be a gap and go. If the market just is, it's really going to depend on the market. I keep coming back to that. It's going to depend on the market. Oxy, this is my last one, guys. No, not my last one. I'm going to show you my swing trade that I put on. And once again, I did it as a selling a put. So Oxy, I got to look at Oxy on the larger time frame for a second. All right, Oxy's been in a major pullback, but it's pulling back to a resistance channel. It's in the middle of that regression channel. It's in the middle of the regression channel. It came in, it undercut the 20-period moving average and then shot straight back up. It seems to have some downward momentum at this time. Wouldn't be surprised if we came all the way in to test the bottom of this regression channel. Do I expect it to necessarily break the bottom of the regression channel? Not necessarily. If we pulled a ABC Fibonacci extension off of here, let's see what it comes up with. This is a strong stock. I wouldn't be surprised if it just held that, if that 61.8 is the final move on that ABC move. So that's the end of your ABC move. So how do you trade this? Honestly, for me, if I want to get into this stock, it's very easy, okay? It's this right here. You have this trend line. Here's your major trend line, right? Then you have this trend line right here. And I'm not drawing it exactly the way it needs to be drawn, which I would do. Let's go ahead and draw it like that. There you go. So you have this trend line right here. It breaks up above that trend line and starts moving up, then you can be good. And then you might want to take it off right here. And when it then comes back and back tests this and breaks above that, then you can stay longer. But you can get long on this, especially if it moves down into this regression channel right here. And it actually continues to honor that downtrend. That's a very steep downtrend, so the move above it should be pretty nice. I'm looking at right around the 60 area, so 60.5. Break up above would be 61. Play your price action. Guys, it's going to be a great championship game tonight. The final four, or the final two championship between Michigan and UConn. And I hope you guys have a great trading day. Remember to go with the flow today, okay? Don't get caught on the wrong side. Make lots of money. Take care of yourselves.